Hey everybody, this is Daniel and today we'll discuss how to start in trading, because it's quite difficult to understand how to start in trading. Everybody will say, oh, it's easy, we'll go throw some money in the market and hopefully we'll win something, but it's not like that. First of all, you got to understand that trading is lethal, okay? It's very, very dangerous, and behind that wall there are some wolves and some savage animals that will take your money. So, first of all, you got to understand that you got a market, Nasdaq and New York Stock Exchange. And here on FinViz again, I'm not doing any ads, okay? I'm just using FinViz, and FinViz is dedicated to beginners like yourself. You got the exchange, you got Amex, that's the oldest one, Nasdaq, that is quite new, and here you can find all, let's say, technological companies like Apple, like Microsoft, I don't know, all the modern companies, and New York Stock Exchange. And in New York Stock Exchange you can find the companies that are producing the real economy, okay, that are producing food, that are producing, I don't know, furniture, all the steel or iron and so on and so on. Okay, we don't go too much into details. I'm just want to tell you how to start in trading. So first of all, you need to understand that there are some rules, okay, in the stock exchange, and you got to understand those rules, and you got to understand how to interpret those rules. You don't go just throwing money to throw money there. You got to understand how to enter into a trade and how to exit into a trade. You got to understand what a broker is, and you got to understand that there are different types of brokers. You got to understand that you can bet for the stock price to go up. Okay, let's have an example. Immunon Incorporated or whatever. Okay, let's say you have traded today, and yesterday the price was 118. Okay, and you bet, because the bet, okay, that the price is going up. So you are buying a couple of shares from this company, okay, and this will go up. What you need to know is that the market is, the stock exchange market is not acting like a market. It's just respecting the rules of an auction, okay, of an auction. You know, the guy that is getting a hammer in his hand and screaming for the price. Okay, these little ones here, okay, are little auctions. Yeah, these are not candles. Don't use the word candles because it's stupid, and candles are used in churches, weddings, or during the night, or whatever. Yeah, these are called spread because you got a difference between the ask and the bid. Yeah, very, very simple. Something else, again, I'm repeating, trading is lethal, is very like lethal, okay, like very, very dangerous. So can kill your money. You don't want your money to be killed. You need your money to have a living. That's it. Also, if you don't have enough money in your pocket, don't enter the trade. Do not trade. I recommend, first of all, do not trade. Yeah, it's very simple, and I recommend it all over my episodes. Something else. Everybody's talking that you need to establish some very precise objectives. What the fuck? This is stupid. What kind of objectives you can establish if you don't know what trade means, if you don't know what stock exchange is? This is stupid again. First of all, understand all the rules, how you enter the market, okay, how you put an order, okay, for the I don't know, this is long, okay, if you buy it from here and you close it to here, is long. If you sell it here, if you enter the transaction here and you get out of the transaction here, this is short. And short, it's always outside, a bet outside the market. You have to understand what that is, allocate, and you have to understand what it's a pre-market, okay, this area here, and what is an aftermarket. Yeah, there are some rules, and also you got to understand the notions of what is happening here. At the same time, you got to understand the timeline here, when to use it, and especially when not to use it. What I can recommend you in the first month of your presence in the stock exchange, please go and use an account without money, or an account where you don't use money. Generally, the brokers are offering this kind of account that is a demo account. So exercise it and also learn how to use every option in those brokers. Options, I mean buttons, okay? How this is functioning. How can I enter a trade? How can I exit a trade? What these charts mean, okay? Because you got charts here. How a chart look. What is this volume here? What is this price here? Understands the structure of the price. So you got so many things to learn. Don't enter the trade. Please do not go and trade. It's very simple and very straightforward. Okay, let's go a little bit back. What else do you have? You got to understand that you have different time horizons, okay? And one of the most important aspect of all is you got to look at the market. You got to take 1 or 2 steps behind, okay? Don't look at the market in detail. Don't look at 50 minutes or 5 minutes, okay? Only if you day trade. But if you are swing, I will explain in the next episode what swing and investment means. You got to see the whole structure all together, from where is coming and where is going. At the same time, you got to understand something else, a very important element: history. What the history of a stock means. Because if you can understand the history, you will know the future. And if you don't understand the history, you will not be predictable in your trading. Okay? Okay, the next step is to understand how an auction function into the stock exchange. I'll detail this into another episode, because you got auctions here. You got an auction, weekly auction in each of this spread. Don't use candle. Don't use candle, please. Yeah? Candle, 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 candle. No. Spread, 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 spread. Each of this is auction. Even at 3 minutes, you got little auctions here. What an auction means, you got to understand what a market maker is. Because a market maker, his main duty is to put enough liquidity into the market for the price of this share not to go to zero. But a market maker can trade for itself and obtain profit. Why? Because he's sacrificing himself, okay, buying on loss. And when he's buying on loss, he's catching the falling knife. Yeah, that's, I don't know, the theoretical word for what he's doing. So he can do some transaction on his own. Very, very simple. What else? In these little auctions here, the number of shares, of titles, let's say, that have been sold and have been bought is different, but the number of buyers and sellers, it's always equal. Yeah, this is an auction. It's possible that in this little red motherfucker here, the little one here, okay, we got a, so it's coming from 287 to a maximum 359. The number of the people that have bought and have sold, it's equal, but the number of titles or shares that have been sold is higher than the number of the shares that have been bought, even with one. Okay, and we have a medium price at 324. Simple as that. So this, in this auction, during 3 minutes here, they have sold more than they have bought. Simple as that. Okay, this is an auction. You got to understand what is long and what is short. Whenever you are buying something from here to here, you are buying and you own it. It's yourself, okay? You own it. And after that, you sell it in the market. But what is happening if the price is coming down? And you know this. So you go and bet against or together with the broker. What is happening? You go to the broker and ask him, okay, now we are talking about short positions. Let's say you got this, okay, let's say this is coming from here through here, okay, from this price up 364 to 273, and you know this. So you enter here, but first of all, you go to the broker. Hello broker, what's up? I want to put a short bet on this one. So this is a bet outside the market, and the broker is trying to locate for some shares to be shorted. This is a short, so it's a bet outside the market. Generally, from the float, this is a float here, for EMNN, this is the ticker EMUNON, there are in the market, the total shares that are available for short is 20%. So 20%, we are talking about 1.82 million available for the all brokers in the world to short this stock here. So from those 2 million, our broker is going and asking in the market, is somebody having some, let's say, stocks to short? He's finding out a price, and after that he's selling you at a different price, higher of course. So you have to rent. Okay, we're not talking about commission transactions, okay, or commission for transaction. We're talking about the price to rent those shares in order to be shorted. So you pay the rent, the broker is taking those shares, puts them on a shelf separately till the end of the bet, okay, and when the bet is ending, let's say you have won the bet, the broker is the one that will pay you. Simple as that. So I have also explained you what a short means. These are the main element you got to know before to start to trade. If you don't want to learn, if you don't want to know the primordial elements of trading, don't enter the trade. I have cut this explanation, okay, for the beginners in 3 episodes. This is number 1. Don't forget to follow, to like, and you are special invite to Stockforce One. See you there.